What is a national bank under the National Bank Act? Have you ever wondered how the United States managed its finances during the American Civil War? One key piece of legislation that shaped this financial landscape was the National Bank Act of 1863, with its important amendments in 1864. This act was designed to create a uniform national currency and re-establish a central banking system, which had been dismantled years earlier. So, what exactly is a national bank under this act? A national bank is a financial institution that is chartered by the federal government. This was a shift from the state-chartered banks that were common before the act was passed. National banks were required to hold United States Treasury securities as collateral. This meant that when they issued national bank notes, those notes were backed by the federal government, ensuring that the currency was stable and reliable. The National Bank Act also set up the Office of the Comptroller of the Currency. This office was responsible for examining and regulating national banks. By doing this, the government aimed to maintain a stable banking system and ensure that all national banks followed the same standards. This was particularly important during the Civil War, when financial stability was essential for the Union's war efforts. The creation of national banks played a vital role in financing the war. These banks provided a stable source of funding through the sale of government bonds. This financial support allowed the Union to efficiently mobilize resources and personnel, which was crucial during such a tumultuous time. Before the National Bank Act, the banking system was decentralized and often unreliable. The act helped to replace this with a more centralized and uniform system, which was necessary for the economic stability of the nation. By establishing national banks, the government aimed to create a more consistent financial framework that could withstand the pressures of war. In summary, a national bank under the National Bank Act is a federally chartered financial institution that plays a key role in the banking system. It helps ensure a stable currency and supports the government's financial needs, especially during times of crisis like the American Civil War.